And welcome to the weekly roundup, week ending 23rd of April. Hope that you're enjoying these weekly reports. Please do subscribe to receive regular stock market content. Any questions, pop them in the comments box below. Always happy to hear from you. And then also like to take the opportunity to introduce the Atlantic app, packed full of all the essential resources for any real trader. Live trade recommendations, stop loss levels, target prices, continued risk management for your live positions, trending stocks, support stocks, as well as all the information for the week ahead. It really is an essential companion for anyone trading the markets professionally, properly and seriously. Right, this week, what a wrestle we've had between the vaccine-led recovery and rising COVID concerns again. COVID cases have been rising sharply in India. Over 300,000 new cases recorded on Thursday. And then over in Japan, the world's third largest economy, also on the brink of a new lockdown amid a resurgence in cases. Concerns that these curbs could slow the global recovery has dragged on stocks at the start of the week. Second half of the week, a bit more upbeat. Strong corporate earnings in both Europe and the US underpinned the risk sentiment. The US has outperformed Europe this week, with the S&P and the Dow heading towards the end of the week flat. Nasdaq looking to book mild weekly losses around 0.7%. Meanwhile, in Europe, the FTSE actually looking to have shed around 1.5% this week, dragged down by heavyweight oil majors. And the DAX, it's set to book declines of around 1.2%. Commodity markets, while oil had a huge one last week, 6% gains, so they've fallen lower this week, pulling back around 3% so far. India and Japan are the third and fourth largest consumers of oil globally, so tight COVID lockdown restrictions in these countries could dent the demand outlook significantly, which is obviously also hitting the sentiment for oil as well. Data showed an unexpected build in crude inventories, which is added to the downbeat mood towards the commodity overall. Gold is on track for its third straight week of gains. Concerns surrounding the rising COVID cases and the impact on global growth has seen US inflation expectations and treasury yields move lower. Now, lower yields make gold more attractive. So the precious metals also received a boost from safe haven inflows. Over in the FX market, US dollar on track for another weekly loss, third straight weekly decline as it follows yields lower. The Canadian dollar, that saw a big jump on Wednesday after the Bank of Canada moved to taper its asset purchase program and started to talk about rate increases. They're the first central bank to turn quite hawkish, raising the question, will the others follow suit? However, across the week, the commodity currency is flat owing to falling oil prices. The euro, the ECB is due to announce their policy very shortly. No changes expected, although Christine Lagarde could sound more upbeat about the outlook for the region. The euro against the dollar trades 0.6% up this week, a third straight week of gains. On the stock market front, US earnings season has ramped up this week, and broadly speaking, the numbers have been strong. Netflix was a bit of an outlier. Whilst it beat on earnings and revenue, subscriber numbers were very disappointing, with just 4 million new subscribers against 6 million forecast. Furthermore, Netflix guided for just 1 million additional subscribers in Q2 as the COVID boom appears to have come to an end. So we actually saw Netflix shares dive over 7%. Tesla and Peloton have both been under the spotlight for safety reasons this week. A driverless Tesla caused a fatal crash in Texas, raising questions about the car's self-drive feature. Between you and me, it'll take a while before I get into a driverless car. But even so, the stock is heading towards the weekend pretty flat. Meanwhile, Peloton down over 14% after 39 incidents were reported over a treadmill and the dangers it posed to small children and animals. AB Foods, owners of Primark over here in the UK, trades 5.5% down so far this week after expressing caution in its interim results. Revenues declined by 70%, pre-tax profits dropped by 8%. I think they really need to get Primark digitised and online sooner rather than later. So that's it really. Like I said at the start, please check out the app. A lot of great content in there for for the real world traders out there. So thank you very much for watching. Please remember to subscribe. Any questions, don't hesitate to ask. Thank you.